Hello and welcome back, guys and girls, to my weekend update on the financial markets. My name is Jens and I will cover with you today, like always, S&P 500, US oil, gold and Bitcoin against the US dollar. The goal of this channel and this trading strategy is to outperform the S&P 500 index on a year-to-year basis, but at least have the same performance like the S&P 500 index with less drawdown, so less volatility in the overall portfolio. Let's start directly with S&P 500 index on the weekly time frame. Here on the weekly time frame, we can see that we are still in an uptrend. We have the 200 moving average below price. Also, the weekly solid orange uptrend line is intact, and we left behind the last major all-time highs from January 2022. Since then, we are plotting new all-time highs, new impulses, followed by corrections. And now is the question, after the break of the secondary weekly dotted uptrend line, will we see here a double top scenario where price turns and will find support in these major support areas, the last all-time high from January 2022 and the orange solid weekly uptrend line. From there, build a base and recover and start again the rise to the upside. That's scenario A. I think it's the more unlikely one. I explained that later to you why I think so. And another scenario is the more bullish one, where we will break through the last all-time high, make a retest and continue, like we have seen in the past, the major uptrend. For that, to analyze, I want to go down with you to the daily time frame, where we can see price action in more detail. After the break of this secondary weekly uptrend line, I was able to draw this daily white solid downtrend line. This one got also broken to the upside, created a price gap, which is a good thing because price gaps to the upside normally act later if they're getting retested as support areas for price. And yeah, I expected that price will maybe come down to this level to get rejected here and then start continuing the overall uptrend, but it didn't. That can also be a strong sign because market participants don't let price go that low and think that it's too cheap and buy and push prices higher and higher. At the 4-hour time frame, we can see that we build out here a consolidation zone, a small one, but if this gets broken to the upside and creates a new all-time high, that would be a bullish scenario for me. And because of that, I also want to trade this scenario, and I explain this trade to you now at the daily time frame because it's a little bit more long-term trade. If we go to the daily and zoom a little bit here out to the upside, we can see my plan is, if we make a new all-time high, I will start a long trade to the upside with a risk-reward ratio of 2.15, which is in my case an ideal risk-reward ratio, 2-to-1. That's a solid thing. You're risking 1% for 2%, or in this case, I'm pretty confident and I made my nearly maximum stop loss with 2% of the account balance, in this case of this account, nearly $2,000. If we see prices hitting my entry and then directly turn and hit my stop loss level. That's the risk of trading, but the risk can be sweetened if we see that there's also a target with 4.2% in profit, what is nearly $4,200 with this account. Why I have chosen this stop loss and this take profit. The stop loss is simply because it's below structure, and if we leave structure to the upside and make a new all-time high takes out the likelihood of a double top scenario and that we will directly turn and make new lows again to retest the major weekly ones, like I explained to you a few minutes ago. It's not impossible that we will see a slightly higher high and then lower lows, but the likelihood is lower, so the statistical advantage is on our side. And yeah, I will enter here, stop loss below structure, because if we turn and we move below the structure, it's statistical again likely that we will make then lower lows and lower highs and continue downtrend, or we will see a larger correction than expected. And yeah, the take profit is with the Fibonacci tools. You take the low of the movement to the high of the movement, and then go all the way back down, and then you get your major Fibonacci zones. This one can be your first target, where you maybe change your entry, change your your stop loss level. So this one, you take that to your entry level. So if price then moves against you, you can't lose money except the fees you paid for the trade. And then you can run the trade risk-free into your take profit. Or you reduce the amount you're risking by half of the position. There are a couple of ways to do that. In my case, I will probably trail the stop loss to my entry level if we get below this level and see some structure that's supporting price. But I will go more into detail if this trade gets triggered, and we will discuss the trade then in my next weekend update report. If you don't want to miss that, please subscribe to the channel and you will get notified if you activate the bell if a new video is uploaded. Yeah, that's it for S&P 500. Let's switch to US oil. US oil on the weekly time frame, the first thing you can see is this massive monthly downtrend line in red. This was a long downtrend and then it got finally broken to the upside. Since then, price moved into a weekly consolidation here, which I marked with this orange solid downtrend line that got broken to the upside, which was a bullish sign for me, and I was expecting after that new all-time highs. But I haven't seen a movement like that since then, so maybe I'm wrong with my analysis here. And the second thing I can look at is the 200 moving average, which was often support for price. It worked well every time in the past, and now we got significantly below it and also got rejected from this line to the downside. So maybe I have to change my perspective to a bearish one, at least for the short-term view. To analyze that, we want to go to the daily time frame. Here you can see that price moved into a kind of daily triangle marked by this white dotted lines, and normally a triangle formation is a clear thing. If you see a breakout to one side, it will normally continue in this direction. Here we have seen a breakout to the downside, so probably price will continue in this direction, maybe all the way down to this weekly support zone. Yeah, we got some mixed signals. MACD is plotting new or higher lows and price makes lower lows, so that's normally a bullish sign. Price reacted also to that, but I think the overall trend will turn bearish. Not 100% sure, but you can never be 100% sure in trading. You can only trade the statistical edge, and sometimes, or the most of the times, it works for you and sometimes it works against you. Because of that, you have your risk management. In my case, that's risking at this trade 1%, or in this case of this portfolio, $1,000 at the trade and not more. Let's switch to the 4-hour time frame to see what I did in more detail. We had a similar situation in the past, an uptrend, a break of the uptrend, a retest, and then after the break of the retest to the downside, we have seen lower prices. I have seen here a similar situation. And for our uptrend, a break of the uptrend, a retest, and then after the break of the retest to the downside, I entered the trade to the short side, shorting US oil, profiting from lower prices. Then price found support at this weekly trend line and the white dotted line from the triangle and got rejected to the upside, but then it wasn't able to hit my stop loss because the 200 moving average at the 4-hour time frame was acting as resistance, and price declined and plotted a new low, lower low. First low, lower high, lower low. This is technically a downtrend, so I will follow the path, or I think that oil is following this path is now the most likely scenario. If we see lower prices from here, at some point I will move my stop loss to my entry point so that I'm not able to lose money on this trade except the fees. Let's talk about my take profit. My take profit is at $69 per barrel. That would be a profit of $2,400 for me, or 2.4% on the account balance. Why this level? I can explain that on the daily time frame. This level was in the past place of a lot of price action, and price got also rejected from here to the upside, so I don't want to risk to take a higher take profit. I think the risk reward ratio is good, and I would be happy if this one will get triggered. But if we will see prices decline out of this triangle to the downside, it's definitely possible that we will go all the way back down to this weekly support zone, and from there on may recover and then start the long term ending downtrend and starting uptrend. But we will see. I keep you updated on my next weekend update. Let's switch to gold. Yeah, gold at the weekly time frame, we can see we are also in an uptrend here, like at the SP500. We have been able to break an often tested resistance zone to the upside, and since then price is nearly unstoppable. If we zoom a little bit into it, we can see an impulse, a correction, a second impulse, a second correction, and now we are in the third impulse. Now is the question, how far will go the third impulse before we see a pullback? I think it's possible that the pullback is coming in the next couple of days. Because of that, we are switching to the daily time frame. Here we can see that price moved into a consolidation zone and broke it finally to the upside, which is a bullish sign. But MACD is crossing to the downside, so I think a retest of this smaller triangle here, or even the daily support and resistance zone here, once was resistance, now turning support, could be tested. And from there on, I would like to see a downtrend breaking to the upside, and I would be on the long side trading it all the way to the upside. That would look a little bit with a path like this. Maybe we'll go to this level here, would be also fitting, break this downtrend to the upside and then higher highs, or we will go even lower, maybe to this daily support zone, break this downtrend to the upside and see again higher highs. So I'm overall bullish for gold. The bad scenario would be, or the bearish one, that we will break below this daily support zone and this secondary daily uptrend line, retest and go all the way back down to this solid white daily uptrend. Price should find resistance there, maybe in combination with the 200 moving average, and rise from there again. I'm not seeing the likelihood of a completely breakdown all the way back down to this weekly X resistance zone, no support zone. That would be pretty unlikely, but yeah, just that you heard from it. If we drop down to the 4-hour time frame, we can see the last price action in more detail. Here we can see the 4-hour support zone I was able to draw in. That is fitting with the secondary daily uptrend line and white dotted. We had a 4-hour uptrend line that got broken to the downside, building a small consolidation zone here. Maybe it will keep consolidating and then breaking out to the upside, making a retest and continuing the overall uptrend. That could be a tradable event, maybe with a little bit smaller stop loss, so not risking that much of your portfolio, because the movements are quite small and the stop losses are quite near to price. My favorite scenario, like shown on the daily, would be that we will at least retest this support zone here, X resistance zone, now turning support, and from there on breaking the downtrend at the 4-hour time frame, and then new all-time highs, or even retesting the secondary white dotted daily uptrend in combination with the 200 moving average at the 4-hour time frame, and breaking higher from here. So yeah, I will keep you updated. Have a close eye on gold during the week, and now you know my plans, and you can make your own research and your own trading plans. That's it for gold. Let's go to, last but not least, Bitcoin against the US dollar. Bitcoin at a weekly, we can see we have made new all-time highs, but after that we had trouble to continue with it, so we moved into a downtrend. I think we have seen the low here at the news crash, and from there on we should recover and start soon a new impulse to the upside. But for that, let's drop down to the daily time frame. Here we can see the price channel Bitcoin is moving into since the last all-time high, and here creating the low of the movement, in my view, not guaranteed. And I don't think that we will see price leave again this price channel to the downside. That for me would be a really bearish case and would probably mean that we will retest this monthly uptrend line again around the 44,000 US dollar level. But I'm more bullish than this. Yeah, my scenario was, okay, we bounced here at the lower side of the channel, marked with the white dotted trend line. From there we moved back into this daily support and resistance zone, where price often finds support or resistance. We broke slightly above, retested into it, and then broke it to the upside, and I thought, okay, now we're starting a new impulse to the upside, at least to the upper side of this price channel. If we drop down to the 4-hour time frame, you can see what I have done. We have seen here this retest, breakout above the support and resistance zone, a retest into it. Then we had this downtrend line that got broken to the upside. We plotted higher highs and higher lows, and after the break of point B of this A, B, C correction, I entered the trade to the upside, which was at the first point a good idea because we started rising directly, but then price found support at old resistance and support zones and declined back lower. I said to you I will change my stop loss to my, or move my stop loss to my entry point to take the trade risk-free if we see prices above this consolidation zone. I have never seen that, so my stop loss is still at minus $1,000 if we got hit. Yeah, it's looking bad for this trade, but not hopeless, because maybe my stop loss is chosen well and price will hold here and break the short-term downtrend again to the upside and continue the expected uptrend to this upper side of the channel where my take profit is waiting. Yeah, otherwise, if we dip a small percentages lower, I will hit my stop loss. I will lose 1% of my trading capital, and that's the risk management. And probably after the break of that, the likelihood is there that we will stop here at the low of the movement A, B, C, point C, and from there on start higher. Then I should have moved my stop loss in the beginning, in the opening of the trade, below that level, but then the risk reward ratio wouldn't have been that good like it is now with 1.5. That's the minimum risk reward ratio I want. Everything lower is not worth the risk, at least in my view. So's life, yeah. But if we will exceed this point to the downside, there's pretty statistical probability is high that we will see price again retest the lower side of the price channel. I hope not that we will leave it to the downside retest and make lower lows, because like I said a couple sentences ago, that would be pretty bearish for Bitcoin. Yeah, let's see what time is bringing us and Bitcoin is bringing us. I will keep you updated on my next weekend report. Don't forget to subscribe so you don't miss any news, and I hope you have a good week. Bye bye, see you and hear you next time.